All right, good morning, everyone. Today is November 3rd, 2021, and I'm back with another edition of the Wednesday live show. And let's see what we have going on today is the one open trade in IRM is getting closed at today's open because they are releasing earnings tomorrow morning at the open. Before the bell, I should say. They're releasing earnings before the bell, and so the way that we have everything set is that we don't hold over earnings, and we close it using today's opening price. So there you go. So anyway, um, as of as of the close yesterday, let's see. Let me go to my open trades on the other computer. As of the close yesterday, Iron Mountain was up 2.93%. We had a little gap up this morning, so the official stats will be roughly a 3% gain in this. And of course, that doesn't mean that anyone's going to sell. Whoops, right at the opening tick, right? So if today, anytime during the session is a decent time to close it out. So anyway, we'll be closing it out at the open, using the opening price, I should say. And as you can see, it managed to rally up and hit the target this morning. So I suppose that's a positive development there. It's too bad about the earnings coming out because this is this is a pretty good looking pattern right here. Now there's no telling, what the stock's going to do after earnings, but nice little sort of pre-earnings run up, I should say, and looking pretty good. So if you decided to sort of hang on and see what was going to happen, then should be able to sell it right about the target. And let's see, when would the last earnings have come out? It's hard to tell from the chart, obviously a few months ago, but good looking pattern there. It was a nice, it's kind of a slow moving stock. It started to put on a few long range days here recently, and then you can see just the past few days here really kind of kicked it in, and so you can see this exactly kind of what we were envisioning was a big cup up. And so it'll be interesting to see what the reaction to earnings is tomorrow. But for right now, as of the close today, this is going to go into the closed trades, and so we will have no open trades. However, Johnson & Johnson, look at this. Let me extend this line over here. Marking up these charts on the fly here is kind of a thing, but there you go. So you can see how that looks. Let me save this since I moved this line. So there you go. It's we've excuse me, we've had a couple little pokes. Now earnings already came out for J&J, so we've had a couple little pokes over the trigger line, but no close yet. Um, it's kind of a slow moving stock, and I know that it's been a pending trade since back over here. I think since September. Let's see. Let me check here. Get the exact date that Johnson & Johnson hit the pending list at 9/27. So it was right towards the tail end of September, like back over here. And then of course it took a little foray there below the 200-day moving average and a little dip. It came it came kind of close to actually getting deleted off the list, but you can see there's a pretty nice base forming right here, and it's a nice solid base on what I suppose you could call a blue chip stock. And there's the recovery since the pandemic sell-off in the market, and so you can see that it's actually forming a pretty decent pattern there. And if it can if it can just get some mojo to the upside, we could be looking at, a similar cupping up pattern, right? And so right now we're kind of in the thick of earnings season. Today's Fed day. Um, got some other stuff going on. Actually working on updating the logins for the website, the software that drives that. So I got a message posted that you may see, but everything seems to be working okay. So there may or may not be any issues with that, but I just want to let you know it's something I'm working on in case you do have an issue. You can email me, and of course you've probably seen the note that I posted. So anyway, once we start to get through the tail end of earnings season, then I would expect to see more. I would expect to see more stocks hit the pending list. There's the I should have just pulled this up. So there was the gain in Iron Mountain. Nothing, nothing really too exciting, but when we, as I pointed out when this stock was on the pending list, that it's basically has a pretty low ATR and a real well-behaved trading pattern, which is kind of nice. But on something like that, as far as percentage gains, you kind of keep your expectations low because the stock just doesn't move a whole lot, right? Now, obviously, when they release earnings tomorrow morning, could get a significant move. So now let's see what else is going on. So AMD was a pretty nice. That was the last close trade. I figure I'd pull that up here since there's not a whole lot going on right now, right in the thick of earnings season. So this was the trade that was closed previous to IRM, and you see this one triggered in over here, ran straight to the target, kept running, and then it's interesting the earnings reaction on this. Like this was earnings. Actually, this was the day ahead of earnings right here. So it was a weird sort of a doji candle day. It opened, rallied way up, and then came back and closed basically right where it opened. And then the following day, you can see you had a gap down, and then this sort of weird little pattern. And then look at this. Of course, the market up at all-time highs too is making things a little bit difficult. Now, there's a lot of stocks, obviously, that are not at all-time highs, but let's just take a look at the overall market now that we've looked at the three stocks that we've been focused on for some time here. Funny thing about this most recent run-up is it's kind of based on, well, I'm not sure what it's based on. We had, let's see, was it Amazon? Amazon kind of Amazon and Facebook and what was the other one? Apple didn't really impress everybody with their earnings, so that's kind of wild. Now Tesla has been acting like really crazy, and so these Tesla's up like 30% in just the past couple of weeks, just absolute insanity, absolutely crazy. But it is what it is. Crazy stuff happens in the markets, but man, it's just incredible. I'm sure you saw that there was news that Hertz was going to buy a bunch of Teslas or whatever, and then Elon Musk came out and said that no contract had been signed. So this stock is just defies sort of all logic, the market cap, but it has been for as long as I can remember. For the past couple of years, it's just sort of defied every sort of conventional metric, and sometimes stocks do that. And so, boy, anybody that was short this thing has been burned repeatedly, and this latest little sort of run up here, just absolutely crazy. So let's look at the indexes real quick here. Qs, we had sort of the slow motion kind of sell off in September to October, And of course, I don't know if you guys have ever heard of the Halloween indicator, but we're basically, theoretically, we're entering the best 6 month period for the stock market according to the calendar. And so that's something to keep in mind. Stocks are historically strong this time of year, and it all begins with on Halloween, right? Or I guess the day after Halloween. So they call it the Halloween indicator, and it's a seasonal thing. And of course, it doesn't always work, right? There's a lot of that seasonal stuff that works most of the time, but obviously you can't necessarily bank on it. I remember 2018. 2018 is a good example of a year where the market started off strong, and in January, everybody was talking about how, the old January effect. And so 2018 was like one of the best Januaries in years, which everybody said bodes well for the remainder of the year. And then at the end of the year, market had a huge sell-off, right? So that's the most recent example I can think of off the top of my head where seasonals just didn't really play out the way everybody anticipated. Um, so, you got a lot of crazy stuff going on. The Fed announcement is today, and the debate is whether they're going to begin tapering now or hold off. And interest rates have been going up. And incidentally, I saw an actual chart today of historical periods where interest rates were rising and the market did great. And so it's kind of funny because every now and then you'll get like a spike in interest rates and the market will sell off, and they attribute the market sell off to a rise in interest rates. And then you go back and you look at the historical data, and typically rising interest rates mean a strong economy. And so in the past, the market has done well under that scenario. So anyway, here's the cues, sort of a straight line up. This kind of reminds me of this section over here. Actually, there's a lot of symmetry on this chart. Like right here, you got like this hump, right? You see this where my cursor is here. So you can see the basically like, camel hump looking thing. And then the market kind of, bounced around a few days and then just took off in a straight line. You have almost the same thing right here. You have the hump, right? And then you've got it's a little bit different, not much though. It's a very similar looking pattern. Notice on this hump that there was one day that was like a big sort of gap down. You see that gap there, and like a long range day down, and then another leg down. You had the same thing here. You got the hump, and then there's that gap down day, a little bit of a rally that closed the gap, just like back over here, closed the gap, and then another leg down. And then all of a sudden, it turns around and just sort of a straight line. And so where it turned around over here, right here, it broke over the 50-day moving average, and there was a pretty massive rally in a straight line subsequently. And so if it's the angle on this one, I mean, it's hard to tell, and there's not much difference, but the angle on this one's even a little bit steeper. And so, day for day, if you match these up, it looks like there's still potential. If the duration of this run, which basically, only ended briefly here with a little bit of a sell-off. So it's just something I like to look for, symmetrical patterns on the chart. The big news here is the Russell 2000, the old IWM. And actually, let me pick that out of my list here. The IWM has finally broken out of this box. And so the most interesting thing is going to be what kind of continuation we get, right? So, obviously the market's been led by large cap stocks, and the small caps have sort of been languishing for most of the year inside of this box, and just now starting to break out of it. And so it's going to be interesting to see if people start, jumping into some of these small caps or even the small cap index here, because theoretically, it's a pretty decent technical breakout. Now that doesn't mean that it's just a straight shot from here for it to continue to go higher. My guess would be that you break out of the box and then you kind of come back down. I mean, ideally, if you're looking for this thing to really take off and go higher, ideally you would spend a little bit of time sort of above it and then come back and maybe retest it and use the highs of this box as support. And it won't surprise me to see a little shakeout. Um, so it'll be most interesting to see how far it can get out of the top of the box before you get some sort of a pullback. And of course, as we've seen, stocks and indexes, they can move quick, right? So they can break out, and then you get like a run up like this. Basically, even over here, like in March, you basically had a run from the bottom of the box, actually below the bottom of the box, all the way to the top in 6 days or 6 trading days, right? So it looked like the index was breaking down over here, and then it just turned around and ran up there. So anyway, a lot of time spent inside that box, and theoretically, the more time that something spends in a consolidation pattern like this, once it finally breaks, then you get a big move. So everything kind of hinges on the market reaction to the Fed today, and it's going to be interesting to see what the reaction is. And typically, I don't necessarily, you can't necessarily trust the first reaction intraday. So usually in these Fed weeks, the close on Friday kind of determines everything. So if I go back to SPX here and I switch to a weekly chart, the weekly chart's basically, look at this, just almost a straight line. That one little dip there, about 5.5% from high to low, and then of course, right back up. So it's going to be interesting to see. And now, we're pretty much through earnings season, and the market's kind of shrugged everything off. So the market has literally shrugged off any bad news that's come at it thus far, and almost on a daily basis for the past couple of weeks, we've seen new all-time highs. So even a pullback from the highs. Even a pullback from the highs is not really going to be a huge big deal as long as this previous low holds, right? So that'll be the big thing to watch. I've seen some people that that like to draw a trend line, across the highs, and a lot of times when you do that, you can kind of see an upper range there. So I'm not gonna try and draw that on the. Let's look at the monthly chart, just for fun here, because last month was the past couple months actually have been a little bit unusual, because you had a pretty rough month in September, and then in October it actually ticked below the low, and then totally engulfed it. So let's see if I pull up a candlestick chart here. It's not really a bullish engulfing candle, because the body of the candle didn't engulf the previous month, but it's still very similar. So kind of interesting. It looks a little bit like if you combine these 2 months and then add that one, looks kind of similar. So let me go back to my open highlight. Now, of course, we're right at the beginning of September. So anyway, so that's about it. we've made it most of the way through earnings season, which is good, and so we'll be able to start to see some stocks now that may hit the potential the pending list for potential trades. And as I mentioned before, IRM is now joins AMD as a closed trade. Hit the target today. Whoops, if I just type it in, my lines aren't on the chart. I have to actually pull it up from my watch list. So yeah, this one actually turned out pretty good. The trigger was a little bit, the trigger was sort of back over this and took a pretty good dip there, and the system never actually moved the trigger down. Probably because the 50-day moving average here, it was looking for the price to move back over the 50-day, I would guess. Otherwise, if the 50-day had been below, I might have expected this to come down just a little bit, but that's neither here nor there. So turns out that this worked out well. And the only other thing I can say is that J&J, as of last night's close, I mean, it was within just a shade of triggering in here. So it looks like we got a little bit of it's still early in the day, obviously. So we may see a little bit of a retrenchment here, but it's got a lot of potential. So you can see the big massive cup sort of starting to form here. So we'll see what happens with that. And other than that, keep your eye on the pending list for anything new that shows up. And we don't get anything on the pending list that's getting ready to come out with earnings. So that's been sort of one of I mentioned this last week. That's one of the things that has kind of made everything seem sort of dull. And plus, with the market up at an all-time high, basically in a straight line, any new positions sort of run the risk of getting caught up in any subsequent sell-off, which typically after you have a run like we've just seen, hey, the odds of something triggering a sell-off, which brings me to my last point here, and then I'm going to wrap this up, is that in the past, I mean, over the years, there's been a lot of times that I remember that that Fed Day actually, was the trigger for a change in trend. Like the market would run up, run up, run up, and then on Fed Day, that would sort of spark a little mini sell-off that had a certain magnitude and duration. But a lot of times Fed Day, the Fed announcement day, can actually be the day that that sort of triggers a little bit of a reversal. So I forget what year it was, but there was one year that like literally every Fed day the market sold off in a couple of weeks after that. You could mark the Fed days on a chart and see a dip after that each time. So anyway, that's something to be aware of. So anyway, thanks for tuning in. I will see you back here